Supply and demand versus support and resistance. What are the similarities? What are the differences? What are my overall thoughts? That is the question we are going to be talking about today. I get asked that question a lot, as well as what are my thoughts with the Wyckoff theory, Elliott wave theory, smart money, and I get asked those questions a lot because they're all very similar in a way, but primarily the most is with support and resistance when it comes to supply and demand. Now, the common concept of supply and demand out there is you are looking for big institutional money coming into the market. Now, how are you going to identify, spot these on a chart when it comes to supply and demand? Well, there's typically four patterns that these traders trade. And I'll show you a picture of what they look like. So here is the picture. Let me scroll in so you guys can quickly see. Hopefully it's not too blurry. But when it comes to the four patterns, you have two supply zones and two demand zones. You are typically looking for strong imbalances. That's kind of the whole principle of the supply and demand methodology. You're trying to identify where the big money institutions are buying and selling. And how can you identify that? Well, you can identify that, you can spot it on a chart by looking for these very strong imbalances in the market. Understand, we are just a drop in the ocean when it comes to retail traders, and the big money, they have very large orders. So they make these very strong candlesticks. So that's kind of the principle of what supply and demand traders are trying to do. They're trying to identify these very strong moves for supply, for demand, once again for supply, once again for demand. And on a chart, that looks like over here, a little bit more quality, zones like that. Look at the amount of selling that came in here, right? So clearly, institutions, the big money, found the most value up in here, and vice versa for demand. You'll have areas of demand down here. Why? Because look at the strong amount of buyers that came in. If there was equal amount of buyers and sellers, price would go sideways. If there was a serious imbalance between buyers and sellers, there will be a very strong move to the downside or to the upside, like I drew out and just talked about. If prices return up into this supply zone, I am looking for selling opportunities. Why? Because previously, a lot of sellers came into the market. So I'm thinking in my head, well, previously they saw a lot of value, then prices. So if and when prices come back, they might see value in it again. Same thing for demand down here. Very strong move to the upside, a lot of value. So if and when prices come back, we will see buyers potentially step into the market. Now, I don't believe in the whole there's 100 million buy orders stepping into the market here. They're unfilled buy orders. I really don't personally subscribe to that method. I'd really just, it's much easier to think about it as in looking for value. They saw value here before, they might see value here in it again. That's the way that I approach it. Now, when it comes to support and resistance, same type of thing. Here, we'll look at a couple pictures. Very simple. It's just an area where resistance of where sellers are taking control as well as buyers are taking control. So here is an example of just the bottom of the range. Buyers seem to be taking control, and at the top there. And you guys know the old saying, old resistance, it breaks, it becomes support, and old support becomes resistance. So here, if we have price consistently coming up and respecting resistance of an area of where sellers are coming into the market, then when prices return into that area, we are thinking that the sellers might come into it again. Why? Because the previous times that price has done it, the sellers have taken control. Same thing for support. If you want to look at it with this example, when price comes down into this area, well, hey, buyers seem to be taking control. So if prices pull back into that area, we might see buyers take control again, right? And if it breaks, okay, it becomes resistant or support. It becomes the opposite of what it was. Now, one thing that kind of separates the two methodologies, as I talked about this really quickly a couple of minutes ago, is in support and resistance, the more times a zone is tested and respected, the better quality it is, right? And then for supply and demand, the whole concept is the more times it's tested, the less quality it is, right? Now, I personally don't really I believe in it to a certain extent, depending on what the trend is and what the market condition is. But understand, if price is respecting an area 8 times, 10 times, then why would you be looking to take an opposite side, right? So an example of this is the US 2000. We pop over to the daily time frame. There is nothing wrong with buying low, selling high, calling this support, calling this resistance, right? There's nothing wrong with that. It's just a top of a range and the bottom of a range. It's where buyers seem to be taking control and coming into the market, and vice versa for supply. It's where sellers are coming into it, where sellers are coming in and taking control. It's more sellers, so price goes down. Price goes down into the demand slash support slash bottom of the range. Buyers take control. It's all this basically the same stuff. So let's try to focus in on what's happening right now. Right now, what some traders might be looking to do is, hey, old support becomes resistance. So they're looking at this area saying, okay, this was once support, it broke through it, so now this is becoming resistance. That's totally correct, totally understandable. And this was the previous top, if I recall. But since then, okay, it's now resistance. That's what support and resistance traders are looking at. As for supply and demand traders, they see this as a supply zone and they're looking for selling opportunities. Why? Because sellers clearly came into the market and made this massive imbalance, made a big move to the downside. So if prices return up into this area again, they might see those same sellers coming into the market. Same type of thing. You're not always going to have support and resistance traders and supply and demand traders on the same side. But in this case, this is where you see support and resistance and supply and demand traders on the same side. So you might see, hey, coming up into resistance, coming up into supply, previous sellers have taken control. This might be a good area to be looking for selling opportunities on smaller time frames. And then you can go down to smaller time frames and say, hey, I want to look for sell entries. I personally like that supply zone up there. I would shorten it up just a little bit because, hey, that's where the imbalance really took control. But hey, since we're in that general area of where sellers took control previously, well, we could go down to 5 minutes, 30 minutes, 15 minutes, and see if we can identify any selling opportunities. You know what I mean? I talk about this in my tips videos, supply and demand course part 1, part 2, part 3, as well as multiple time frame analysis. If you guys want to find this, go to my YouTube channel, go to playlist, and then click on tips. It's called my tips playlist. It covers the whole supply and demand methodology, and I think there's also another video on support and resistance, if I recall. Even though I don't really trade it, but I do consider what other traders are looking at. But understanding multiple time frame analysis, just where price is on the big picture, and confirmation about timing your entries. Okay.
Quick interruption on this video. I am editing, as you can see, and I just wanted to add this point because this is one of my pet peeve questions. Because in support and resistance, the concept is old support becomes resistance and old resistance becomes support, but this is not true for supply and demand. If you remove a demand zone, that demand zone does not become support, or sorry, that demand zone does not become supply. Vice versa for supply. If you remove supply, that supply does not become demand. Okay, a quick example of this is, say, for example, here. This little supply zone, just because it's been removed, doesn't now make this demand. Okay? Supply removed doesn't make this now demand. The difference between that US 2000, is it has the structure of the supply zone. It has a drop base drop. It removed demand, but it has the identity, the pattern of a supply zone by looking like this. If it does not look like this, it is not a supply or demand zone, and we can call it an area of buyers or sellers, which is still fine. I'm going to show you another example, but once again, the base, it needs to have one of these four patterns. Say, for example, you have a drop base drop, and then prices rally up. That old supply does not become demand, okay? The only way that would happen is if we have, say, a drop base. Let me do it over here. If we have a drop base drop and then prices rally, base rally, and then we have a demand zone because it represents demand. Okay? Very simple.
Let's talk about supply and demand really quickly because we're going to be jumping back and forth. Clearly, this was a trade on corn. For supply and demand traders, we are looking for strong imbalances where buyers came into the market. Clearly, a lot of buyers came into the market down in here. Why? How do we know that? Because they left this massive candlestick to the upside. right? Very strong move to the upside. So what does that tell you? There was more buyers than sellers coming into the market. So if prices return back into that area, we might see the buyers step into the market again. All right. So that is supply and demand. That is a demand zone that broke trend, removed an opposing zone, a very strong imbalance to the upside, letting you know that buyers took control. So now we're betting on the fact that we might see those buyers step into the market again by pushing buy if prices return. Now, support and resistance traders would not see that as support, right? They probably wouldn't look at that. I think they would be looking for more obvious stuff. I think maybe they would be considering this as a support and resistance at some point. I could be wrong, but I'm just looking at that as general. Sideways range, sellers seem to be coming in up here, buyers seem to be coming in down here, and playing the range like that, looking for confirmation. And then, they might see that, oh, it's test resistance, resistance, breaks above it, now it's support. That's totally fine. But when you see them come together is when you see an obvious range being played out, or you see, like I explained on the US 2000, where you see a supply zone as well as resistance. In this case, it's a supply zone, right? As well as resistance because price broke below. So in that case, you'd be trading with the same amount of traders. And it's the same thing for support and resistance, guys. There's no better methodology, in my opinion, as long as you're consistent with the approach, looking for the strong imbalances, because that's the whole principle of supply and demand is trying to identify where the big money is coming in. And how are you going to identify that? You are going to identify those areas of interest by seeing very strong candlesticks being opened and closed, being printed, right? Like I explained over here, very strong moves to the upside, very strong candlesticks. You're not going to see this thing slowly grind up or slowly grind down. All right, that's kind of supply and demand, and then waiting for prices to return to those levels and then buying and selling, right? You could be looking for confirmation, like I talked about before. If you want to get those tips videos, my YouTube video, go to playlist, go to tips, and if you want the free training on everything, then you can head over to moneyballtrading.com where we are helping traders become consistently profitable, and you can get the free class there. Where I'll explain to you why 90% of the traders are losing money, the free trading course videos, as well as brokers, interviews, and much more. So if you guys enjoyed this video, comment, like, subscribe. Really appreciate if you're on the subscribe train. Reach out to me on social media at Moneyball Austin if you have any questions, and let me know what you guys think. Do you guys disagree? Wyckoff theory, Elliott wave theory? What's your bite size of a methodology? All right, enjoy your time. Cheers, everyone. Bye bye.